want to now bring in the CEO of LinkedIn, Jeff Weiner. He just rang the opening bell this morning. He's with us from the New York Stock Exchange. Jeff, welcome to the show. Congratulations on today's what looks like quite a successful offering. What are you expecting to do with the capital you're going to make off of this? What kind of acquisitions?
If on the acquisition front, we'll probably stay towards the smaller end of that range, looking for talent, looking for technology that can accelerate our product roadmap. If we find potential tuck-ins that could be accretive on a top and bottom line basis, we would obviously consider those as well. It's an exciting day for us.
Well, the question for so many, once they get the excitement of this first debut aside, is what's to prevent a Facebook or another competitor from trying to eat into your market share? How do you remain dominant?
Yeah, I think context really matters, and LinkedIn is all about serving the needs of our professional members, and in that respect, it makes our platform unique. We have over 100 million members now. We're growing at the fastest absolute rate of growth in the company's history, adding faster than a member per second, and that exclusive focus on creating value for our membership, whether that's through their professional identity, enabling them to connect with other professionals, enabling them to share knowledge, information, business intelligence that makes them better in the roles they're already in. I think that uniquely situates us, and that's certainly the case when it comes to the critical mass scale that we've achieved on a global basis.
What do you expect to continue to be your biggest source of revenue? Are you going to lean more on the subscriber-based model here?
I think we're very fortunate to have this diverse group of business lines. We have hiring solutions, obviously, that enables recruiters to recruit from over 100 million members and really perform the perfect search. Marketing solutions or ad sales, which enables marketers to target a pretty unique audience in terms of value added, influence, affluence, and education. Then the premium subscriptions marketplace that you're talking about, which enables us to cherry pick products and services, get them in front of the right member at the right time. We're going to continue to invest across that portfolio. Today, hiring solutions is the largest and fastest growing of the three, but we're feeling good about the prospects for all three of those lines.
Hey, Jeff, Corey Johnson to San Francisco. This is a long way from Yahoo, huh?
I'm very focused on LinkedIn at this point, Corey. It's a pretty exciting day for us, and it's yet another milestone for the company in terms of its achieving long-term vision. We're excited. Yeah.
Well, let me ask you about that. When you came into LinkedIn, you came having been an executive at Yahoo, and LinkedIn really turned around under your leadership there. What was it that you did to get the hiring business to really take off that eluded, even your founders, Reid Hoffman? I mean, that business is really, as you mentioned, the fastest growing business you've got in a hiring environment that's not easy in this country. What did you do to turn that around?
Well, it's really a team effort, and I know sometimes that sounds cliche. At LinkedIn, building a world-class team comes first, and none of this would have been possible without the vision of our founders, that founding team who laid the foundation, and the amazing people we have on board today. But to answer your question more specifically, it's about focus. Some of these hyper-growth stories in the Valley, it's really about focus and making sure you understand who you are as a company, what your first priority is. If you only have one resource, one managerial cycle, where you're going to allocate that, and then building adjacencies around that core competency and around those competitive advantages. And with regard to hiring solutions, job seekers only make up really a minority of the total engagement on LinkedIn, but it's a truly unique value proposition for the recruiter. And the fact that we can create dream jobs, opportunities for our membership when they weren't even looking for a job, what's called a passive candidate, is truly unique. It's never been possible to search a critical mass database or platform like ours at scale before. And I think that in part has propelled that line item.
Jeff, when I've talked to investors who've been looking at this deal, one of the things they look at is growth in Europe in particular, but outside of this country and in Europe, for future growth for the company. But it looks like that business is somewhat different than it has been in the U.S., where you've seen most of your success. Talk to me about how Europe is different for LinkedIn in terms of what you've done in the past.
Yeah, so Europe is a great story for us. It was really the first marketplace outside of the U.S. where we established a sales and marketing office. That was in London. And it's grown materially since that time several years ago. Today we have over 24 million unique users in Europe. It's clearly the largest region outside the United States, and it's our largest revenue outside of the United States. Hiring solutions, interestingly enough, fastest growing region of the world at scale is Europe. They've really taken to that solution. And we're going to be aggressively expanding there. So Going to be rolling out beyond London. We opened up in Amsterdam this past year, Dublin International Operational Headquarters. We're going to be pushing out into the Nordics and further into Western Europe with additional sales and marketing resources, and we like the opportunity there.
One of the things interesting to me about your financials, if you look back at the income statement, is that you guys were able to kind of turn a switch last year and take some profits. But you warn in the prospectus that that might not be the case in future years. When do you think profits are important, and how do you make that decision?
Yeah, so as you could see from 2010, EBITDA margins had expanded nicely, and this year we decided was going to be an investment year for us, and that's largely based on the fact that over the last 7 quarters we've seen accelerating top-line growth. We believe this is an increasing returns business. We're operating in 2 very large addressable markets in terms of hiring solutions and marketing solutions, and we want to get after that opportunity. So we're going to be investing in the underlying technology platform. We're going to be investing in the products and our member experience and launching more products that our members love. We're going to be investing in our global sales force to make sure we can keep up with the demand. And we're going to continue to push out local languages and sales and marketing offices on a global basis.
Jeff, it's Margaret Brennan back at headquarters again. You priced about 45. You begin trading. We've seen your stock surge like 85% or more. You're now 83.28 a share. Do you feel like you left some money on the table? Are you comfortable with where you priced at, what you're trading at?
Yeah, very comfortable with where we priced. We spent a lot of time with investors, and the right kind of investors, folks that understand the story, understand the fundamentals, are in it for the long haul. That's our focus. We're in this for the long term in terms of realizing the true potential and opportunity of this platform. In terms of today's initial trades, we'll leave that to the marketplace. I wouldn't read too much into any one day's worth of trading. We're in this for the long term, and as we continue to focus on executing our business, the fundamentals will be there and the stock price will take care of itself.
All right. Jeff, thanks so much for joining us. Congratulations on the debut. We're going to have to leave it right there. But as we do, you take a look at the price of LinkedIn, now trading just short of $83 a share.